Hey guys, this will be the last talk for the Blockstack Summit, which is called ReDeFine. This is a fireside chat between on Dapp adoption cycle with Dapp.com and BlockVenture Coalition. And I'll let them take it from here.
Hey guys, um, yeah, this is Kyle, and we have Philip and Taylor from Blockstack Ventures. We're happy to hear today. Guys, how's it going? Why don't we start with a intro? Um, yeah, you want to take it
Yeah,
from there?
I mean, things are going well. I'm out on the East Coast. Philip's out on the West Coast. We're the two partners of the BlockVenture Coalition. We're an alliance of university blockchain groups and venture capital funds. I started off in the space working at a VC, and Philip and I go back all the way to Carnegie Mellon when Philip founded the Carnegie Mellon Blockchain Group. So, Philip, if you wanted to provide some insight just on a little bit of the founding story there, I'll kick it over to you.
Thanks, Tyler. As Tyler mentioned, I'm based on the West Coast. I started the Carnegie Mellon Blockchain Group back in 2016, heading into 2017. That grew up to around like 100, 150 or so members. Like that ended up actually becoming like a full-fledged research department at Carnegie Mellon. So, we have actually like 20 full-time researchers at Carnegie Mellon studying solely DLT tech. So they're like, really hands-on there. But really kind of, we had like a couple, the kind of brainchild, I would guess, that and the story that I kind of point to for Block Ventures kind of founding. There were a couple like PhDs in CS at CMU who were working on like the bleeding edge of the tech, and literally like the actual kind of like the most impressive things like that I've heard of, right? Like working on zero knowledge proofs, working on rollups, working on like different protocols to reduce the centralization risk of exchanges. And like they were filling out the contact us form on Andreessen's website and wondering why they weren't getting any sort of funding. So anyways, I was like, really kind of like, all right, there's a gap here between the university groups and the resources that are kind of out and available in this space. So, with that kind of in mind, I had a lot of different relationships on the university side. Todd had a pretty impressive network of funds through his time at Struck Capital Crypto. And then, we kind of, had the idea for BlockVenture to kind of merge the two. We've been doing it full time ever since. I worked for a month at PNC doing institutional asset management after I graduated. About a month and a half in, I gave my notice and I've been doing this full time ever since. So, appreciate you guys having me on. Hopefully that gives you a little bit of context on BlockVenture, my background, and kind of everything that we're doing here. So Kyle, I'll turn it back over to you and just kind of like, I guess, just start however you'd like to take it.
Yeah. There's not much audience engagement here, right? How many people heard about Dev.com, or how many people are using Dev.com? Okay. So we started. So I'm the founder and CEO of Dapp.com. So we are the largest, Dapp marketplace, and also like analytic platform for decentralized applications in the space. We started the company back in 2018 when dApps were started getting hot. So we've been in this industry for over 2 years. We pretty much monitor what's happened in the past, and what we did a lot of research on what's gonna happen. So we've been through the up and downs of DeFi, NFTs, and all that. So I'm gonna start with sharing my recently we see a lot of VCs. We talk to a lot of VCs about people ask, we share a lot of deal flows with different exchanges and all that as well. We the question that we've been asked is hey, did you catch the DeFi wave? I think before I share it as a platform point of view, I would like to ask Taylor and Philip, what's happening on the VC sides when you see when DeFi is kind of hot, and what are the VC's perspectives on dApps?
Yeah, I mean, so it's kind of interesting. We get a lot of different perspectives. With our alliance, we have these monthly or bi-monthly calls with about 44 different blockchain specific VCs that we've partnered with. And then we just talk with over 100 funds in general. And these are fund of funds, family offices, hedge funds. Some guys are taking a multi-year, view. Other people are looking to more and catch some of these different peaks in growth and more of like the hype cycle. So there's a ton of different stuff that we hear. As of late, the big hype has really been DeFi over the summer, which everyone saw with like liquidity mining and yield farming. And it was this, pretty novel mechanism of making your capital kind of go to work where it was just otherwise idly sitting there. And for a little bit, some of like these private rounds that would typically happen kind of slowed. Like the VCs were seeing such growth and adoption in the DeFi space. It would take a lot for someone to go and invest into a project where they'd be locked up for a year or two, when they could instead like wrap their Bitcoin and put it into a Uniswap contract and then farm tokens. So you kind of saw this like opportunity cost come into play. And then really as of late, maybe over the last month, a lot of people have been talking about non-fungible tokens. And I think there's kind of a split right now. There's, a lot of people are saying, hey, this is inevitable. Like you think about 5 years out, we're going to have tokenized art. We're going to have games like Fortnite and, Gen Z and millennials, like all these people who are playing video games, trading skins, doing stuff like that. But, in the short run right now, why would I go buy an NFT art piece on, a marketplace? Like I could, screenshot, that statue or that picture and like, have it on my laptop. So, some funds, they're like, we couldn't justify it to our limited partners and the people who have invested into us that I would go buy this like piece of digital art. But I definitely think there's some growth opportunities. Maybe if there's ways that some of these projects can add more utility to the different dApps, we'll see some more adoption. But right now it's kind of halted a little bit. We'll see where it continues from now. But Philip, I'd love to loop you in and get your thoughts as well.
Yeah, I mean, not really too much else to add outside of what you've already kind of brought to the table. We've seen definitely it's pretty crazy kind of within the within like the crypto space. There's there's definitely lots of hype, and it kind of moves from DeFi to NFTs. A year ago it was stable coins when there was a lot of inflows over there, and there's a lot of different kind of trends that are in this space right now. I would say that DeFi, has definitely been the flavor of the month. I would say that it's just another kind of, it's just another, I think it's here to stay for sure, like without a doubt. I think everything that has been successful thus far on the blockchain has touched speculation. And I think DeFi is just another like branch of that, right? So you've seen, right, like exchanges, have made money in the blockchain space. Custody has made money in the blockchain space, like custodians. Those have been like pretty much the best investments to date. And venture guys know that. DeFi is probably the third category that's like kind of proving itself right now, since it also touches kind of custody and speculation, right? Earn a return on your assets by like lending it, right? And then you get guys like guys like a BlockFi, right? And the way that they're generating alpha, above everyone else is because they actually are able to tap into these economies of scale. They can go and like provide like liquidity to guys like Binance, right? And they provide that liquidity because they have so much, assets they're able to, lend. They go provide that liquidity to Binance. Binance says, okay, you know what? You will cover the float for a lot of the margin trading. They can then offer whatever, like 5x Bitcoin margin trading or whatever, right? And like use that as a way to get more users in. And like everyone's kind of happy, right? Because if Bitcoin can offer more features, the people who are staking through, Blockfolio can earn returns there. So it's kind of just like we've seen that this ecosystem has really been built out here over the last, I would say, the building's been happening over the last like few years. We've seen it kind of come to fruition now, since everyone's like, hey, they're speculating on these, like they might as well earn returns. So I think that's kind of just the pure like why we've seen it kind of come to this thus far. NFTs has launched a lot of like launches of different platforms and stuff that kind of perpetuated that with the different raises and stuff. But anyways, there's a lot of these different kind of things going on right now, but that's kind of at least my high level thoughts.
Yeah, I like you mentioned about speculation driven. That's right. I recall there was a conversation between me and like some VCs that were saying, hey, what do you see on yield farming? What like why is XYZ company is not doing like a liquidity mining? And my reaction is like, like it's these are like not right. These things like liquidity mining, yield farming, and all these different like mechanism that drive token utilities or that happens like long ago, right? if we look at since people start talking about the concept of Dapp, which is in 2017, when when dApps does not mean like ICO, like I think it means, right, it start to mean in some like application that running fully decentralized on the blockchain. What we've seen is there were a few cycle, or there were a few trends that were happening in the history. So I would like to share that. So it all started in second half of 2017 when NFT, right, there were CryptoKitties, there were a lot of these, we call it like hot potato NFT projects that were launching at the time. There was like crypto countries which sell like a map of the world. USA for like a few hundred ether, like China for like for few hundred ethers, and all those like crypto celebrity with a NFT concept. So NFT were there, and then they were hype on back then already. But it's pretty much driven by like people never seen this before, and since the NFTs trading volume has been go up crazy, that got a lot of attentions, and especially when the Ethereum network was jammed by then, right? And then in towards Q4 2017, right, DEXs, decentralized exchanges, were started to receive a lot of eyeballs because right, it's more secure. Back then it was a big things. So there was either Delta, then it became like Fork Delta right now, but I'm not sure if it's still like working right now. But and then there was IDEX, and there's the Kyber back then. And so that's the first time when there were like decentralized right, finance infrastructure that were being used. Then in the first half of 2018, there were like the farming concept was actually there. Like it's funny because in 2018, right before we launched Dapp.com, we received a lot of like submission requests every day. So we've seen around, what's the number, like around 20 or even more project that look exactly the same. They have the same like front end like design, but they just change from like crocodile farm to like ant farm, to they're like, right, they're like shrimp farms. And if you look at today, it's like it just changed from like farming those fake token into like real token that you could trade on Uniswap, because there's right, there's sushi farm, there's yam farm, there's shrimp farms, which is exactly like what had happened before, right? But the thing is, there's no token back then, right? The people just they just farm these virtual points or something like that, which was not traded. And then in second half of 2018, liquidity mining was introduced because of two players, or actually three. One is there's an exchange called Fcoin from China that doing crazy liquidity mining, which when you trade on the exchange, you get rewarded in their tokens. And then they were and then they were also, because of the mainnet launch was of Tron and EOS back in June 2018. The low gas fee concept would enable liquidity mining. Then that's why, and at the time there was a lot of gaming sites, DICE platform, that they were introducing this liquidity mining mechanism when you do a lot of tradings or you do a lot of games in there, you get a lot of tokens. So so right now, like, so if you pay attention to what I mentioned, like I actually mentioned back in the last like 2017 and 2018, they was already like NFT hype, they were already DeFi DEXs hype, right? There's a farming and liquidity mining concept that happens already, and then now we are doing it 2 years again, but like I would say this time is different, because the audience is different. Back then in 2017, 2018, it was a crypto like this like small group of crypto right if enthusiastic that were doing it for fun, but now it's because of the right with the secondary market trading, so it actually got to reach a broader audience. That's my thought of this, and this is our observation. Like, what do you guys think of this? Like, yeah.
Well, I think you bring up some really good points, and like it's all very cyclical. And like towards the end there, you were kind of hinting at this like idea of like repackaging some of the same trends, and like we saw this before, and now it's happening again. And I think like there's a couple things that have happened in this space. We had the whole like ICO run up. We had like all of like the NFT craziness with like crypto kitties, and some of that stuff ended up getting repackaged throughout the bear market. Like we saw like IEOs, like which were initial exchange offerings for a little bit, become very popular. Each exchange was like launching tokens, trying to tie value to like, transactions through the platform. And, just over time, like a lot of people have continued to like iterate on it, repackage it slightly. Yield farming and liquidity mining became very popular, but I don't think it brought a lot of new entrants into the space. But, that theme really rings true. And then, one of the other funny trends, which I kind of like think back on, it was like something that a lot of investors talked about in like 2017, 2018 was this idea of like the fat protocol thesis. And it kind of just became like a big meme, I think, between like the big crypto community, because, everybody was like talking about the fat protocol and how, Ethereum or whatever layer one would end up being like, hey, this is like the chain that everyone's going to build on. This is like the smart contract chain that would accrue all of the value, compared to Web 2, where a lot of the value accrued in like the application layer, like Facebook, Amazon, Twitter, stuff like that. The idea was that base protocol layer would accrue the value here. And I don't know if that's necessarily true. Like, some of the stuff we've been seeing, like there's a fund, out of Asia called IOSG. They're very active in the Dapp space. We've seen applications like, especially automated market makers like Uniswap. I mean, they seem to have like a lot of value, accruing within them. Like, it's not just about Ethereum anymore. It's about these cool applications and use cases that are built on top of it. And then you could do things like there's like blockchains like Flow Network, which are like specifically designed for like dApps and gaming and those use cases. And they have games like, NBA building on top of them. And, I think we're starting to see some people come around to, looking at the application layer, taking it very seriously. And I think a lot of the interesting things that are going on are in the decentralized finance space, and it's, all on top of these layers. So I wouldn't necessarily say that, fat protocol thesis has come true. I don't know if there's, iteration that, the author of that has made on it since then, but it was just something that kind of jumped to mind while you were talking there.
Do like when we like I think when you were mentioning it on this, we also seen there were like growth of number of users on different dApps, and then also on the platforms, and also like the number of wallet that was created. Like, what drive this? Like in your point of view, is it because of this is because generally like market rebounds, right? Because Bitcoin is performing well, so and or like what was the reason behind, or is it driven by VCs, or like what do you guys think?
Yeah. Well, there's this one idea. Are you guys familiar with the price innovation cycle that like Andreessen talked about?
I'm not.
Okay, it's something I'm not an expert on, but it's probably like one of my best guesses. Like kind of going back to this idea of how the space is very cyclical. I still think like Bitcoin is king. Like sentiment on Bitcoin still drives like how a lot of people view the industry. And with each halving, you have this like increased attention around Bitcoin. The block reward gets cut in half, and some of like the way that people are thinking about Bitcoin, whether they're like bullish or bearish, ends up bringing like more news outlets to look at the industry. More developers looking at the industry. And then you end up seeing like, a lot of growth in many different areas, a lot of applications that are, building, whether it's not just on Bitcoin, but in, maybe other layer ones. But yeah, and Andreessen kind of coined it the Bitcoin price innovation cycle or something along those lines. But basically like the Bitcoin halving, kind of starts this, decrease in the block reward, which leads to like, a series of domino effects that end up, bringing more people into the space, more developers, more media attention, and like the cycle just kind of plays out over and over again. I'm sure it's just like a cumulative nature of like people getting educated, all these like different aspects too. But yeah, Phil, would love to hear your thoughts as well.
Yeah. I would just ask, I would kind of just offer one other insight. I think we've realized, like, as an industry that, just being able to say, oh, we're a game and, we have a block, we're using a blockchain, like it's something that's pretty outdated. That's not going to bring anyone, like, any users. Like, you'll get a couple speculators or something, but like, that's really not what drives actual adoption. What drives adoption is when there's like a blockchain. I mean, specifically within gaming, there's either like, creative incentives or that are created through the use of blockchain, or the use of blockchain allows you to like hold a financial incentive in like a network. So generally, like, the blockchain component is hidden pretty significantly. Like with NBA Top Shot, like there is no mention of blockchain, but you can like provably show that you own some of these different NFTs. Like with guys, there's like a lot of projects that are going like B2B and getting different like in-app integrations. There's projects like Props that has over 5 million users. There's projects, there's a lot of these different projects that are out there, right? And they actually have like adoption, right? But it's what's really missing, I would say, is that number one, like, I mean, to touch on the protocol, the fat protocol theory, right? Like you're not like, there needs to be incentives in order for there to be actual like value accrual in the actual layer ones. I don't think like in 2017, everyone, like most of the, like, I mean, what we saw with like the vegetable farming this year, that was all just like pure greed driven, like very similar with like CryptoKitties. Like the reason people were buying CryptoKitties was not because they like wanted to like own, like, I don't know, like it was more of just like, hey, I can put like whatever and just like make returns, right? And I think like that's where the industry hasn't fully gotten over the hump yet, right? It's like a lot of like with all these all of it has just been chasing yields, but it's a bunch of like degenerate like gambling kind of thus far. We're starting to see like true like marketplaces come out of it, and like I mean, maybe like saying that like CryptoKitty gambling and stuff is like degenerate. Maybe that's like a little bit too far, but like I mean, like, because you could say that that's very similar to like people bidding on these different like NFTs, right, or like different like art pieces. But like I would say that there is probably a little bit of a difference. But I think like, because I mean, a lot of traditional finance is based off things that like traditional based off greed too. So it's like discounting that is like it's not something I want to do. Like it's very legitimate. But I would say that like just in general, like having some of these applications that just really gain mainstream adoption, whether it's like in remittances, whether it's really like unbanking, banking the unbanked, like a narrative we've been hearing forever. Like there hasn't really been anyone who's really like captured that market yet. There's a bunch of projects trying to do that right now, but really once we move away from like, hey, like let's just like clog, they end up like clogging the Ethereum network because they're just trying to like multiply their ETH or whatever. Like once we move a little bit away from that to like a more kind of like I would guess like legitimate, like, hey, there are different marketplaces that you can contribute to. There's different like all these different blockchains that serve these different purposes, and they all have these different apps that have blockchain components that are in them. But it's like you're not making users like write down 24-word like seed phrases when they sign up for apps, because like that's just it's not gonna be viral, right? Like if you have the higher. So anyways, kind of long-winded like rant. I would say that's probably like the last thing that's like really needed. But I think, I mean, there's none of this is going away. Like the distributed, the fact of the matter is that like distributed tech, and the ability to kind of like decentralize away a lot of these middlemen, like that narrative is still like very much in play. So anyways, I'll stop there and get your thoughts on that, Kyle.
I think the one thing that was interesting, I see changes in the last 2 years. Like in 2018, they're like, if you're saying that you are building a chain that beats Ethereum, like people will think, oh, this is a real deal, and people will go in and invest, right? Like and then you can mention tons of reasons, like, hey, like it's slow, it's expensive, and all that. And after 2 years, like you realize that they were not beating Ethereum, right? But like you see, like just now, Tyler, you mentioned like right, the what in the fat protocol theory, it says like the layer one is gonna be right, getting all the value, right, not the application. but it changed, and right now what you're seeing is like they could be like people on board to a new blockchain because of an application, not because of right they have invested in that protocol level, or they're a user of blockchain. and 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 right, one thing that was really interested is that like, so if you look at 2 years, like back then there were a lot of the layer one projects do like grow their ecosystem in a like very different way compared to now. Like if back then like there's a layer one that they would throw, like they raise a lot of money, a lot of money, and then they would throw millions of dollars to say, hey, like I wanna expand my ecosystem. That like this is the best ecosystem that will be Ethereum eventually, and right, and then just come on board and build stuff around it. You can build applications, you can build infrastructures and all that. And but most of these programs like just making like a lot of like bounty hunting, right, developer getting rich, and then if we look back, and like all these dApps or all these products built back then have zero users now. And then right, and because the developers actually build stuff, but they realize that, oh, like right, I could build like a next generation of CryptoKitty. I could build like a similar concept with Uniswap, but people don't go on board because we also have this on XYZ blockchain. So and this like this I would say this failure, right, it's like I think everyone learned a lesson from there. And then what we see now is like the new generation blockchain, they change the way that they play the game. So they focus more on the user infrastructure level, which is I'll say there are a few. Like one is token, right? Like you see, like Tron did very great job when they were able to get billions of USDT like tether on their blockchain, right? EOS did it as well, and so like USDC was on Matic. So like this new generation blockchain were first start with like getting like those tokens with good utilities onto their blockchain that people already holding on other platform. So that's one. And then the second one is like very important. Like just now, Philip, you mentioned about the 12 keywords or 24 keywords, right? And now, like in the past, you have to pretty much do it on each of the blockchain, for each of the blockchain if you want to account. But right now, if you look at like all this like right ARM token, trust wallets, and all that, like it's pretty much compatible to all wallets or all blockchain, right? So if you're new chain, you have to work very closely with all these like user onboarding tools, like including us, right? Of course. Like and then they would do like they would build the first flagship application at the beginning, like say like Flow did like NFT Top Shot, like right, Solana had like Serum by FTX, right? So and then once they realized they would have these to right to onboard more developers and users. So that's what I've seen as well on the adoption side.
Cool. So we
Yeah.
are short on time. We're going to transition out. Thanks so much for your time. And
Okay.
we're done
Oh.
with the ReDeFine Summit now. Thanks.
Perfect.